All right, so we dealt with oil, up. We dealt with gold, up. Stocks, flat. Got it all. That's Syria. Now I want to move on to the housing market. We've had a couple of analysts on the show recently who say it could be in for another dip. However, Brendon DeSimone is with us. He's with the Paragon Real Estate Group. He doesn't see a dip. He thinks the worst is behind us. No more bubbles, he says. No more crashes. But there's one thing that I picked down out of your talking points, your notes.
Sure.
You think that mortgage rates could go back up to 10, 14% at some point in the future?
You know, I don't predict that, but what I'd tell you to do is look at the big picture. My parents bought their house in the early 80s, and they had a 14% interest rate. So rates go up and rates go down. A lot of us have very short-term memory. We only know rates at 3, 4, 5%. So look at the big picture. Rates eventually will go up, and that will make housing a little bit less affordable.
Okay, but that's a long way down the road. But we have seen an uptick in mortgage rates from 3.5, 3 3/4 to 4.5, 5%. Okay. Now, doesn't that interfere with your prediction that we're not going to see another dip in housing?
You know, a small rise in interest rates is not a huge amount of money when it comes to someone's monthly payments. I think somebody who's really serious about buying a home, they're not going to rush into buying a home just to get a better rate. They're going to buy the home when it's right time for them.
And you say buy it.
Buy if it makes sense to you now. The low interest rate should be a reminder that you may want to be in the housing market. Don't rush or sprint into it.
Okay, supposing you don't think of it as a place to live in. You think of it as an investment. Now, our viewers, they've got a choice. You can invest in stocks, you can invest in bonds, gold, or a single-family home. Are you saying that that is a good investment, single-family home?
If you're going to hold it for the long term, absolutely. You can lock in a 30-year fixed rate at 4.5%, and you can be solid. If you're in it to quick flip it like they did in 2004, 2005, 2006, you're going to get burned. That's done by professionals.
Well, those are the people who've been investing at the moment, recently. We've got hedge funds which have invested $18 billion buying 100,000 single-family homes. It's that investment that has pushed up prices. If that investment goes away, that investment money goes away, prices come down.
Well, first of all, I don't think those investors plan on flipping those homes. I think they're putting renters in there and holding them for the long term. They're solid investments. I think all those investors getting in these markets in Southern California and Phoenix and Las Vegas, they basically moved sales. Homes weren't moving for so long, so sales numbers were up. And all of a sudden, people heard that and they thought, got to get in the market. And I think what happened earlier this year is that people sprinted out of the gates. The housing market was back. People ran out of those gates, and now I think we'll take a small bit of a breath. Take a step back here. I don't see some huge double dip. Will there be little dips and spits in the market? Of course there will be. We are much more ADD these days with social media and all the information flowing at us so fast. We, make these moves that are very, neurotic in some ways. Think of it for the long haul. Be in it for the long term.
Sitting here, I do sometimes feel a little neurotic with the pace that we try to keep up here. Brendon DeSimone, good stuff, and thanks very much for joining us.
Thanks for having me.